Cool. We should be good to go. Thanks, Mark, for the introduction to TT and for running through AutoSpreader. I'm going to spend a little bit of time looking at some of TT's options functionality, both for INE options and also some of our advanced options functionality that will be coming to INE options soon. I'm going to start by sharing my screen so that you can see, again, in a similar fashion to Mark, I'll show you a couple of slides, but then I do want to show you the platform itself. So let me just share my screen. Great. Hopefully you can now see my screen, and I'll run through a couple of slides. So in terms of options, TT has sort of quite a large number of clients using the platform, for heavily trading options. We have some advanced tools that allow sort of some pretty heavy customization and pricing, as well as some specific order types designed for options. I'm going to sort of briefly run through each of the sort of option-specific tools that we have, and then I'll jump into the platform and we'll look at two of them in a little bit more detail, so you can get a feel for what they look like and how they operate. So these are kind of the key tools that we have within our options suite, and we'll start by just taking a look at the options chain. I'm going to show you when I sort of move over to the platform. It's an industry standard view of the options market, and we'll run through that. But I'll just show you the vol curve manager here. So this allows you to view implied vol curves. It shows you TT's fitted vol curve, which sort of smooths outliers and strikes with widespreads, and even those with no market data at all, which can be really useful. It allows you to show up to 2-day historical at the money volatility and kind of replay the volatility curves over the last 2 days, and visualize those changes in the curve or surface itself. And then finally, and kind of crucially, it allows you to kind of manage your own vol curve. So while you can use TT's, which is based on a binomial pricing model, you do have the flexibility to kind of manage that yourself, and I'll be showing you that shortly. We have a tool called the Options Trade Monitor, which allows you to view kind of time and sales, which you'll be familiar with for a family of options products. But it kind of critically, from an options point of view, it displays the implied vol at the time of trade. It displays theoretical prices and Greeks at the time of each trade, and allows you to filter your display based on criteria, whether they be certain vols, certain Greeks or theoreticals. You can apply a whole bunch of different criteria, and then only see those contracts relating to that. And the other tool that I'll talk about here is our electronic eye. And really this is a tool to help traders identify trading opportunities. So you can, again, similar to the Options Trade Monitor, actually, you can use any of those values or fields to filter results based on your criteria. And TT has a concept called Edge, which sort of based on the criteria you set, allows you to highlight only opportunities where the theoretical value is through the market. And you can, as soon as sort of the criteria you set are met and there's a possible trading opportunity, it will pop up, and you can trade that directly from that screen really quickly and easily. Before I jump into the trading platform and show you a couple of those things in more detail, I just wanted to run through a few of the TT order types. So options specific, we do have two order types. One's not listed here. So we have, but the first one is, we have TT Auto Hedger. So this is a tool that allows you to trade options while, with a pre-configured delta based on your own curve or one of TT's vol curves, automatically hedging into the underlying, which can be really handy. You can choose whether to sort of automatically round up or round down, or whether to sort of round up, if it's above 0.5, or and round down if it's below 0.5. So quite a flexible tool if you're really looking to sort of execute delta neutral strategies. Mark touched on the TT Sniper, a really helpful tool for if you don't want to display your order in the market. This is also a really useful tool, when trading the Chinese markets, where you have a limited number of quotes that you can, changes or amendments to an order you can make per day. You can actually use TT Sniper. So you would submit your order using TT Sniper. It's going to sit on one of TT's algo servers. And then as soon as there is liquidity available at your price and quantity, then TT will submit that order to the market. So it effectively sits above the market. It's not shown to the other market participants, but it's on our algo server, and only when there's available liquidity will it snap into the market. We've got timed orders that allow you to set orders to go in at preset start and end times, or whether specific times, or whether at the pre-open or the open. We've got triggered orders of various sorts, like stops, or the inverse of a stop we call if touched. And we've got the ability to make, sort of any of those trailing. So, you can create quite simply, a triggered trailing stop. You could also create a trailing stop with multiple conditions. So you can use them to do things that are simple, but also they're highly customizable, and you can create quite easily quite complex order types. And all of these allow you to create templates and easily access those by creating your own buttons and so forth. We have OCO orders, so one cancels the other. We have what's called a bracket order, in which you submit a limit order, and TT automatically generates profit taking and stop loss OCO orders once your limit order is filled. And then we have a range of order types for splitting up sort of larger orders into smaller slices. So we have iceberg, time sliced, volume sliced. And then we also have things like time weighted average price orders and volume weighted average price orders. I'm just going to put up this slide which has our contact details before I jump over to the trading platform. So grab a screenshot of that, or speak to someone at TT that you already know, if you like to. But in a moment, I'm going to switch over to the trading platform. So grab that contact details if you like. Okay, any minute now, you should hopefully be able to see my TT platform screen. Again, you're familiar with this from Mark's. So you can see here, I've got the INE crude futures up here at the top in one market grid. I can trade those easily. Here are some of those buttons that I was talking about. I've also got the options contracts below, or I've got some of them, and again, sort of easily tradable directly from the market grid. I'm actually, for most of our advanced options tools, the ones that I just talked about, we are hoping to have those available for the INE options in the sort of short to medium term future. But for today, I'm going to show you some of those tools using NYMEX WTI options, because we don't yet have all of the data and options servers set up for the INE options. But I wanted to show you that you can certainly go ahead and execute, and you can create option strategies using the auto spreader tool that Mark showed you. You can use options as part of your auto spreader strategy if you like as well. So the first thing that I'm going to just take a moment to run through is the options chain. So this is what I refer to as kind of the industry standard view of the options market. And there's a lot going on here, so we'll just take a few moments to run through what's on the screen. I have an order ticket up here at the top, but down here is my options chain. I've got 6 tabs. I've got 3 WTI expiries and 3 Brent expiries, and I can kind of switch between those if I like. We've got strikes going from low to high in the center here. This white line across the middle is centered the strikes nearest to at the money. And then on the left-hand side, we've got call bids and call offers, and we've got put bids and put offers on the right-hand side. We've got both the call bid prices and quantities, and same for offers, and same goes for the puts. So that's just your sort of standard market data. But then in addition to that, we've got a few other things going on here. So between the bid and offer, we've got our call theoretical values and our put theoretical values. We've got our call delta, our put delta, and then you can see these ones with the sort of blue and red highlights. These are my positions in various contracts. So my put position and my call positions are shown down here. Obviously long are blue and short positions in red. And then on the left-hand side, we've got a series of volatilities. So we've got settlement volatility here. We've got implied volatility here. And then we've got what we call active vol. So the active volatility here, which we'll talk about a little bit more detail in a moment, is what's being used to generate sort of theoretical values and any Greeks and those sorts of things. But there are also some additional sort of vols that you can add. So we have the TT fitted vol curve that you could add, and indeed there are columns for all of the Greeks that you could go ahead and add to your options chain here. You can obviously trade directly from here. So, you know, I select the option I want to trade and I've got my order ticket populated. But this really is a really nice way to view a single term of an option and quickly switch between different terms. You can have multiple versions of this window open, or you can use tabs or a combination of both. Under the widgets menu, if we go to options, we'll see a number of the items that I showed you within the slides. And we're just going to spend a few minutes looking at the vol curve manager because I think that will be quite interesting. So I'm actually going to combine these two windows together so that whichever option term I'm looking at here will be displayed in my vol curve manager. So if I right click and choose create group widget, I can just join those two together. And we can start to see our vol curve forming. So let me just expand that out a little bit. So let's talk a little bit about what we're looking at here. So the vol curve manager allows you to see the implied vol curve and create your own vol curve, which can be then used to drive theoretical values in Greeks. You've got all of the different expiries up here at the top. You've got implied vol curves in the middle. And you've got your, usually you would see our historical vol down at the bottom here. Also, you'll see that we have a number of standard deviation points. So these are the points that are being used to build the curve, and you can change those. So these are standard deviations from at the money. So you can see we're going out to 3 standard deviations at the moment. But you can change those, and they'll make more sense in a moment. Within settings, you can choose to change the interest rate and choose the day count between calendar and trading, which obviously useful for interest rate related Greeks. And then you can see that there's a number of vol curves going on here. You've got auto, you've got user, you've got ask, you've got the midpoint, and so forth. So we can see a sort of number of different vol curves available, and we can quickly change between different expiries. So if we look at the November expiry here, we can see our 2-day history, and I can drag through there to see, you know, what were some of the subtle changes to the vol curve over that period. I can just drag over to see how that changed, and that's at the money volatility going back 2 days. You can actually choose, rather than if we expand out one of these, so the November contract, you can actually choose to define your own vol curve. So as well as defining your own standard deviation points here, you can choose, you know, to create what's called a user vol curve. So we have our auto fit, which is TT's vol curve, and you can see the values in here changing. You also have the settlement vol curve here, but if we choose this unlock button here, we can choose to put in our own values for the user vol curve, and I can choose to copy directly the auto fit vols as a starting point, and then go and edit the specific values from there. And you'll see that there's some dots appearing now in my vol curve at the various standard deviations from at the money. So we've defined them here, but we can go ahead and change them, you know, if we want to, after we finish building our curve. And then in terms of actually changing the vol curve itself, we can either change the values here, or we can actually drag and drop the points, the standard deviation points directly on the curve. I can zoom into a specific portion of the vol curve just by sort of dragging my mouse over the time period, and I right click to zoom back out. So if I just want to look at really just around at the money, I can do so there. And then here I can start to drag some of those standard deviation points out if I want to have my own sort of vol curve, just slightly different from the original one. And once I hit save on that vol curve, then it's going to show the user vol curve here. And that vol curve, now that I've hit save, is going to be driving all of my theoretical values and Greeks sort of throughout the suite of option tools that we have. The other sort of widgets that I did mention, widgets is just TT's term for windows within the platform. We did talk briefly about Trade Monitor. Allows you to display sort of time and sales for a family of options and really filter down based on very specific sort of theoretical value criteria or Greek criteria. And again, those values that you're filtering on, you know, will be defined by and driven by whatever you've got configured in your vol curve. The other order type that I didn't touch on before was TT's order by volatility order type. So this is also known as TT OBV, and you'll see it in your sort of order type drop down. This allows you to actually submit orders to the market, but define them in terms of volatility rather than in terms of premium. So obviously most options markets, including the INE one, INE crude options market, are premium quoted. That is, you know, what you're seeing on screen are the premiums in the bid and offer. But using TT's OBV order type, you can actually choose to enter orders with a specific volatility in mind, and that will be converted to a premium based on, you know, sort of the vol curve that you're using or have configured yourself, which can be really handy if you're kind of in that frame of mind. You also see there the TT Auto Hedger order type that I highlighted shows you, you know, whether at the moment we only support market orders for your hedge order, but you can choose sort of how the rounding works, and obviously it's going to be using a delta value sort of based on the theoretical pricing model. So that's all I had to share today. So thanks again to Alex and everyone at Nanhua and at the INE for hosting this event, which has been, you know, wonderful for us to be a part of, and thank you all for listening, and don't hesitate to get in touch with us if you like any more information. I know that Nanhua will be distributing the recordings of each segment as well, so if you feel that there's other people that would benefit, don't hesitate to share those.
Okay, thank you, Chris. I think before we go today, I think there's one question mentioned in the chat, and it says that does TT have the trial version to distribute to the clients to, to just give a free version to run through?
Yeah, if people are getting this for yes, this is Mark. If people like to get in touch, we're happy to discuss we're happy to try and facilitate.
I'm sorry, Chris. I think that's kind of blurry on your mic. So could you fix that and repeat it again, please?
Can you hear me clearly now?
Yes, I can. Yes.
Okay,
please.
yeah. So
Yeah.
in general, we will try and facilitate trials where we can. So yeah, best thing is to get in touch with us directly,
Okay.
and we will do what we can to facilitate that.
Gotcha. Okay. All right. I think that's it. All right. Thank you, Chris, and also Mark, from TT. That was some very handy introduction of the TT platform and interface, and also the auto spreader function in general. And I think that's not only for us, but also for any arbitrator who is interested in the global oil market. And also, as Mark mentioned, TT could be used not only for arbitraging as the auto spreader, but also pretty handy for trading only one contract also. So with the strong backbone and also the full coverage, the full connection coverage topology of TT has, and there has been this long-term relationship between us Nanhua and also TT. So we two together will bring any overseas clients who is interested in trading the international varieties as like the crude oil option contract. So we will give these clients this best services we got to provide the trading solutions